Hello and welcome to VCC Today we have with us Dr. Amit Varma, Managing Partner at Quadria Capital, a healthcare-focused private equity firm with investments in South and Southeast Asian regions, including India. A warm welcome to you, sir. Thank you for joining us.
Thanks very much.
So Quadria Capital raised over $300 million in the last year. So tell us about your investments from the fund so far.
Sure. First up, we are very fortunate to be in the position that we are. It has been a pretty brutal fundraising environment over the past couple of years. And I think we were lucky enough to come up with this fund under extreme circumstances, because I think the environment for LPs is now becoming very, very strict. There is money that is being put to work by LPs, but the diligence process and the differentiation that they're looking for is extremely high. And one of the questions I keep getting asked, so what's different about Quadria? I think clearly to our minds, we are one of the few sector-focused funds out of Asia. And in some ways, it appeals to a certain set of LPs who are looking for sectoral expertise. We did our first close in October of 2013, and we did our final close last year. So far, we made a couple of investments. The first one was in Medica Synergy, which is a Calcutta-based healthcare chain. The idea is to make it into Eastern India's largest healthcare delivery system. The second investment was in Indonesia, in one of Indonesia's largest pharmaceutical company called Soho. Soho is a family-owned enterprise, started off almost 50 years ago. The third investment is in a hospital in Hyderabad called Asian Institute of Gastroenterology. Again, a very well-renowned, reputed institution, which is in the midst of expanding from its current 300-bed facility to a 700-bed facility.
What have been the learnings from these investments that you'd like to take forward for your investments in the future?
I think learning is an ever-continuing process. There's a lot of learning that we institutionalize as a firm. I think it's very important for me to point out that we are hands-on investors. So while we do provide growth equity capital, we view ourselves as quasi-strategics, which means that we are in it for the longer term. We do not put in a single dollar or rupee in till we are sure that we can add value. And to us, value is about rolling up sleeves, sitting on the table and working alongside management companies. So there is board level representation, but there's also committee level representation. Now, our diligence process is reasonably long. We obviously use outside third-party vendors to do the diligence, but there's a lot of work that is done internally by our team. So I think by the time we're done and we invest, companies believe that we are partners and we're not just investors. And I think to our mind, that is Quadria's core strength.
All right. So how many deals are you planning to close in India in this fiscal? And what will be the deal size or the investment amount that you've set aside?
So our sweet spot is anything above $40 million. But because we have a dedicated band of limited partners who come in with co-invest, we punch above our weight. So our deal size ranges anywhere from 40 and can go up to $100 million. The fund by itself can put in 40 to 60 and then we get the co-investment. So that's part one. Part two is that we believe that we will be spreading our $300 million fund across South and Southeast Asia. But it's going to be a reasonably concentrated portfolio. So and that's by design. So by the time we're done, I think we would not have more than 7 or 8 investments.
Okay. So tell us about the investment opportunities in the South and Southeast Asian regions and how the healthcare market there is different from that of India.
Number one, let's look at the macro. It's a firm belief that Southeast and South Asia are remarkably similar when it comes to healthcare. So the language, the cuisine, the culture changes from country to country. But the problems in healthcare are remarkably consistent. What are they? A huge epidemic of lifestyle diseases, large populations, lack of universal health coverage by the government. I don't know of any country which can do it on its own. And a huge dependence on the private sector to deliver healthcare to the last mile. Now, if you play all those themes out, there is a huge amount of opportunity for capital providers to come in and back strong promoters and entrepreneurs. So Quadria invests in 4 quadrants. That's where Quadria comes from. The first one is healthcare delivery. The second one is the generic pharmaceutical space. The third is medical consumables and technology. And the fourth is what we fondly call healthcare retail. So basically dialysis clinics, eye clinics and else. The large opportunity that we are seeing today is essentially in healthcare delivery and generic pharma. And that's where we think 80% of our money will go. The remaining 20% will be in the last 2 buckets. We are seeing a lot of play in consumables. We are beginning to see a lot of play in retail. Unfortunately, the technology space is still very limited. There is a scarcity of companies which can suck up $50 to $100 million size checks. And that's where we believe that these are the kind of companies which are going to mature in the next 4 to 5 years.
Can you tell us more about this healthcare technology space, how attractive it is for investors?
So first up, I think to close out the delivery question that you had, the maximum opportunity we're seeing is in tier 2, tier 3 cities. That's where India lives. That's where Southeast Asia lives, and that's where we believe that healthcare is local. And to me, the biggest change that is going to take place is where we can do point of care in rural and semi-urban areas. And for that, technology plays a great disruption. So what we are hoping to do is identify and work with technology last mile providers to provide point of care in remote sites and then link them into our hubs in the cities. So you can play the entire spectrum. We just need to find a scalable revenue generating model by which we can crack that.
So could Quadria do something to invest in this in a particular space?
So what we've been doing is we've been kind of inundated with lots of people approaching us. Actually, interestingly, not just asking for money. The money is available. I think where we stand a good differentiation is the fact that we understand healthcare. So what we're looking at doing now is incubate a smaller pocket of money by which we would be looking at the early stage and almost venture type deals, $1 to $3 million into these companies, by which we will help smart entrepreneurs and incubate and grow them and then link them into a larger fund. And that's how we believe that we can make the ecosystem work. What are the kind of things that we're looking at in that space? We're looking at how do we provide primary healthcare and connectivity, how do we do point of care diagnostics, so 30 tests on one strip. How do we recruit people? So HR recruiting in healthcare is a very nascent field. Home healthcare is obviously an interesting space to be in. Wellness is a huge market out there which is still not being completely tapped. Nutraceuticals, especially culturally in South and Southeast Asia, has been a very important space. And lastly, figuring out ways by which we can educate doctors better.
So you talked about investment opportunities in this space, like certain sectors that are really attractive. Which sectors, which segments would you stay away from?
So we don't like to do any segment where we don't have meaningful size. And Quadria is very, very clear that whenever we invest, we need to have meaningful stake. Meaningful stake to us is significant minority, so around 25-26%, all the way up to majority. We don't like to do 100% buyouts because we like to work with management teams who have incubated and grown businesses. So at this point of time, probably things like insurance would probably be the only segment I would stay away from, not because we don't want to, it's just that we don't have the ticket size to take it.
Alright. What about investment in drug-making companies that have lead molecules, or would you rather focus on generic?
We are hardcore believers in the generic space.
Right.
We are not great innovators, and we have a very hard time betting on that one molecule which will change the world. But we are happy that once we know we have a known product, we are very, very good at scaling that up.
Right. So specialized diagnostics or mass diagnostics?
Specialized diagnostics always, because till you don't again have sector differentiation or you know what you're playing at, mass generics everybody can do.
Okay. Single specialty, multi-specialty?
Usually when you're talking pharma, you would end up doing multi-specialty, but you go deep. So if you pick one particular specialty, you'll do multiple stuff over there. But I would not do more than 5 or 6 of these specialties.
All right. What is your exit strategy like? Is there an exit pipeline or partial exit in the near term?
So I'll answer it two ways. So if you look at the fact that we only started investing in 2014, we still have a runway to go. I don't see an imminent exit yet. Number two, right now is a very interesting market that we are seeing evolve out of Asia. I think there's ample opportunity basically for strategic sales. There is a lot of potential to get IPOs done. And lastly, because there's so much of ammunition sitting with private equity firms, secondary sales are always an option. But if you ask me, our preferred option is always a strategic.
So we've not seen major or mega PE deals in the healthcare sector. When do you see that happening in the Indian context?
I think it's about scale finally, Joseph. It's about the market maturing and getting into that kind of scale. The big boys of PE usually like to play in the $100 million plus checks. I think the mid-market that we get into, which is the 50 to 100, is a tougher space because these are mid-sized companies who require a lot of hand-holding and time. The big checks that you are talking about, if you looked about 3 or 4 years ago, nobody would have thought of $100+ million deals. We're beginning to get those sniffs. I think in the next 3 to 4 years, I'm a firm believer in Asia, and Asia grows and changes every 3 years. 3 to 4 years from now, I think $100 million deals will be the norm.
Okay. So we talked to some healthcare-focused funds recently, and they apparently cut the size of the target corpus. So what do you have to say to that? Are investors wary of investing in PE, VC, sector-focused in funds in the country?
I'll give you my personal take on this. I think fund size is a function of your pipeline and the kind of deal sizes that you would be doing. And we do not believe that you should have a target size in mind and just go after hell for leather. How did 300 happen? 300 happened because we wanted a concentrated portfolio. We were looking at putting $40 to $50 million to work. We knew we could do 6 to 8 deals. Number two is I think your support of your limited partners in a fund is very, very important. Okay. And we made a conscious effort of getting a team of LPs which are very, very sophisticated in their approach to healthcare and are also willing to put external capital to work. So I think that gives a lot of comfort.
So are these talks about PE firms having difficulties in getting exits overhyped?
No, I don't think they're overhyped. I don't think it's easy getting exits. I think the whole decision about exit is made the day you put your first dollar in. And you can't hope and pray that things work. For that, especially when you work in Asia, a couple of things need to happen. Honest discussion between you and the company so that we know what exit mechanisms look like. Honest decisions about the agreed business plan of what the next 3 to 5 years are going to look like and make the company accountable to delivering those numbers.
It's too early to ask, but I wanted to know when you're going to hit the road for the next round.
So the first goal is to get this fund deployed. As I mentioned to you, that should get done in 2016 and early part of 2017. Okay. And I think that's when we'll go back to the drawing table to see the maturity of our portfolio, have visibility on our exits, and then take a call.
All right. And finally, a quick word to the companies who are seeking to get investment from Quadria.
We like companies which have sector dominance. We like companies with strong management teams who are looking not just for easy capital, but for capital which is going to propel them to the next stage of growth. We like companies who are willing to listen and are willing to treat us as partners. And lastly, we are very, very clear that there are very few healthcare focused funds who can help take you to the next stage. As long as there is honest, transparent, open conversation, pretty much today in Asia, sky is the limit. 3 billion people, epidemic of lifestyle diseases. As I mentioned, government support is very limited. Together, there's nothing that we can do.
It was a pleasure talking to you, and thanks for all the insights.
Thanks very much.